Hey guys, it's David G here. Welcome back to another video. So today I want to teach you how to make money by arbitraging cheap Luna or cheap ETH that you can make on Kujira Finance. Now there's something very interesting going on with this protocol here that I want to teach you about. Part of it's because I believe you can make money in this, whether it's in a bull market or a bear market. And in addition, I think this is a really important thing to understand because it's going to teach you a lot of lessons about liquidations and the overall leverage market. And Kujira is one of the first of its kind. I think we're going to see many more protocols come along like this, and I think things like this could really change the game, and we're going to get into why that is. So first, how is it that people can make money using this app? Well, what people are doing is they're buying liquidated assets at a discount. What you can see on this chart here are the amount of buy orders at various discount rates. So you can see at 4%, you've got roughly $10 million worth of UST just waiting for their orders to be fulfilled. You've got 12.5 million UST just waiting to be filled at 6%. These people are waiting for people to get liquidated on the Anchor protocol in order to buy out their assets really cheap. The way this works is that at any given moment, people trading on leverage are getting their collateral liquidated due to the price of the collateral going below a given price. So for instance, on Anchor protocol, you can borrow up to 60% of what your collateral is worth. So for example, if I have one Luna and that's worth $50, then I can borrow up to 60% of that in UST. So I can borrow up to $30 worth of UST. But if the value of my collateral goes down by 60%, then I'm up for liquidation, which means that all my collateral is going to be sold at market price in order to protect the lender and the integrity of the lending platform. You see, most of the people using Anchor protocol that are currently getting 19.5% just saving their UST or Luna, they're making that money by lending their liquidity out to people borrowing that money. In order to protect these people, the people borrowing money have to put up money that's equal to the amount that they borrow. That way, the lenders will always be protected no matter what happens. Now, at the time of liquidation, the collateral needs to be sold as fast as possible to prevent further losses. And as a result, the collateral is sold for less than market price because of something called slippage. What happens is when someone's liquidation price target is reached, their collateral is immediately sold at market price. When many people are liquidated at once and the collateral is all sold at market price, the buy orders at the current market price are swallowed up, dropping the current market price. This difference between what the collateral ended up being sold for and the market price is the premium that needed to be paid to guarantee the protection for the lenders and maintain the integrity of the platform. And this can only be done if the collateral is sold immediately to prevent further losses. According to Kujira, this premium can be anywhere from 0 to 30% depending on price volatility and volume. But because the protocol or the exchange doing the liquidating is willing to pay a premium to liquidate the assets immediately, the price will continue dropping until all the collateral is sold. But this price drop will lead to more people's liquidation price being triggered, further increasing the sell volume. It is now like a domino effect of liquidations, and this is what people refer to as a liquidation cascade. And such an event could destabilize the entire Terra ecosystem. And the reason is because, as we were mentioning before, Anchor allows people to leverage their collateral to borrow more UST. If there was a large liquidation cascade, tons of UST would be market sold at once, leading to UST depegging from the dollar. Unlike Tether, UST is not backed by actual dollars. It's an algorithmic stablecoin that relies on market forces to keep its price at $1. But if there is a tsunami of sell orders from a liquidation cascade, then the value of UST could be worth below $1. And such an event would destroy the confidence in the whole Terra ecosystem and could lead to its collapse. So this is where Kujira comes in and why it may be critical for the survival of the Terra ecosystem. When someone is liquidated on Anchor protocol, instead of their assets being immediately dumped on the open market, leading to a price drop, the collateral is instead taken to Kujira, where there are already buy orders waiting to buy these liquidated assets for a discount. This buy wall will act as a buffer that will protect against the potential catastrophe that awaits if UST depegs from the dollar. And it does all this by involving you, the user, to get involved in the process of arbitraging discounted liquidated assets. If you place a bid on Kujira, you can wait for someone to get liquidated and you can gobble up their liquidated assets for a discount, getting you some cheap Luna or ETH which you can then use to make money via arbitrage, and at the same time ensuring the integrity of the Luna ecosystem. So to recap, liquidated assets are sold at market price, which lose money from slippage, and this money lost on slippage is the same amount of money you could be making by buying that liquidated asset at a discount on Kujira. Liquidated assets might lose up to 4% of its value, and instead of those liquidations gobbling up all the buy orders and dropping the price even further, those liquidated assets are instead sent to Kujira, where there's already a large amount of people waiting to buy those assets at a discount. So when you look at this chart here, you can see at the bottom left, you can see 0%. Ideally, there's no slippage, and the liquidated assets are sold without any discount, and they just sell exactly for market price. Ideally, there's no slippage, and the liquidated assets are sold without any discount. That's what ideally happens, but that's not always the case. You're going to have assets that are going to be sold for at a 1% loss because they're immediately liquidated and they lost money due to slippage. But as you can see, there's a tiny amount of buyer orders at that 1% range waiting to gobble up those liquidated assets at a 1% discount. But why is there so few? The reason why is because so many of these limit orders get filled that there's just not that many there left. And then same thing when we look at 2%. So many of these limit orders are getting gobbled up that there's just not that many there left. So now we can look at where the bulk of the limit orders are. They're around the 4 to 10% range. All these guys are hoping there's going to be a big liquidation event and they can scoop up all of these discounted Luna and discounted Ethereum. And then you might be wondering, what's the difference between, say, putting a limit order here on Kujira and just putting a limit order out on a normal exchange? Well, the motto of Kujira is that everyone should be a whale, and the reason why most people can't do what we're talking about on normal exchanges is because they're competing with bots with high amounts of liquidity. Here on Kujira though, they've made it so there isn't any bot action. For instance, when I place a bid, I actually have to wait 10 minutes for that order to go through just to impede the progress of bots that want to take advantage of all the arbitrage opportunities. So what are some strategies you can use to make money using Kujira right now? Well, one thing that's the easiest is just try and make bids around the 3% to 4% range. That way you can try and get as many buy orders as filled as possible. Because if you try and get too greedy and you've got buy orders in the 10% range to the 20% or even 30%, there's a very low chance that those are going to end up being filled. If you're feeling a little bit bearish on the overall direction of the market, maybe you think crypto is going to take a big slump again, maybe you might head back into the 30K region. If you're predicting that the price is going to go down, then it's certain that a lot of people are likely to get liquidated, and as such, it makes sense to aim for higher discount prices. So yeah, I wanted to tell you about this, guys, for one reason, just of course so I can teach you about how you can make money on this, but the second reason is just because I think it would pay to learn a little bit about this stuff and pay attention to this new upcoming field that I'm seeing emerging in DeFi. Because what these are secondary markets where you can purchase liquidated assets. And this is one service, Kujira, that's applying just to one lending platform, which is Anchor. Now, Anchor is currently number 2 on lending TVL by rankings on DeFi Llama. But just wait until we have the equivalent of Kujira on Aave, on Compound, JustLend, Benki. And let's see when we finally have them on different layer 1s, when we had them on Phantom, on Polygon, on AVAX. Could Kujira be the one that spreads cross-chain? But at the same time, this could pave the way for things we see in the future where more secondary markets start popping up and maybe one of them will become more successful than the others. So right now I'm betting on Kujira, not necessarily by buying its native token, but just by using the platform and just getting ready for what I see might be happening in the future. And I think it's interesting to learn about this stuff now because by the time new projects come along with a similar kind of tech, you might be able to take advantage very quickly of this new and developing aspect of DeFi. So guys, I hope you enjoyed this video and I'll see you later.